All right, so going into the day and going into the past couple weeks, I have been overall bearish. The other day, we just put in this SMT at all-time highs with ES, giving me further confidence to believe that we are, in fact, going down to these external lows. However, when we zoom in for the day, that doesn't mean we can't take an opportunity to the upside should it present itself. So looking at open, we've got this data high that was formed today as part of PPI. So we know this is going to be a huge draw on liquidity, right? So I don't want to take any shorts knowing that I have this massive draw on liquidity sitting right above me. We've also got London high above that and equal highs at Asia high above that. So going to the morning, I've marked out what I would like to see because I can't take a play straight up to these data highs as there's not enough market structure here for me to justify it. I want to see a sweep of these London lows, tap into this little 15-minute fair value gap that's sitting here right inside of OTE of this range, and then look for a play up to these data highs, right? Where's this 15-minute? It's right inside of OTE of this larger range. So that narrative is there for me to say if price comes down to this area, this is likely where I can see a reversal, potentially targeting these data highs and these equal Asia highs up here. So we open, and let's jump down to the 1 minute. We open at 8:30, and what do? We immediately, immediately run to these London lows. Great. It's exactly what I wanted to see. London lows get taken. We tap this fair value gap on the 15-minute that I was looking to see get tapped. Beautiful. So as part of this run, we have now seen a fair value gap get put in here. And I've got a change in the state of delivery sitting right up here with a clear run up to the data highs that I pointed out in market open. So now what do I need to see? I need to see this fair value gap get inversed and a change in the state of delivery. What happens immediately? Huge displacement through the fair value gap, past the change in the state of delivery, beautiful entry. We enter here. Now in this case, I put my stop below the fair value gap, not below the swing low, because my risk reward isn't going to be what I need it to be. And it's also at this point with this level of momentum, if we're going to come back and invert this, market doesn't want to go higher. So I'm okay to put my stop loss right here. So enter the trade. What happens? First candle, beautiful candle, we shoot up. Now I have to go break even right here. Why? Well, one, we've now swept these equal highs that are sitting here, right? So we've come up, we've swept all this liquidity here, and we're tapping into this swath of fair value gap. So if the market doesn't want to go to these data highs, if these data highs here are not a strong enough magnet to pull price up, this is likely where we're going to see it turn around. It's given us everything we need to know to say, hey, the market has told us it wants to go higher. We are justified in entering here. But if it doesn't want to go higher, this is the area where it's going to decide to turn around. So what ends up happening? Unfortunately, exactly that. Market immediately dumps, delivering out of these 1, 2, 3 minute fair value gaps after it swept these equal high liquidity, and then continues on in the bearish order flow that I was looking for, bigger picture for the day. So unfortunately, these data highs didn't get taken. I do think we're going to come back for them eventually, but the market is just bigger picture. It's telling us that it wants to go lower. And so for the rest of the day, I was listening, didn't see any real opportunities other than this one. We did have this one pullback here into this 15-minute fair value gap after we swept these New York lows from Monday. Unfortunately, when this happened, we wanted to see two things. One, before it happened, I was looking for an internal sweep here, right? We had a 5-minute fair value gap sitting in here, which might be inverted because I moved too far. But we had this 5-minute fair value gap sitting in here. And we needed to see all of these close in order for us to justify a play up into this unmitigated 15-minute fair value gap, which would have been a great draw on liquidity. So sure enough, that doesn't happen until about here. And if we enter here, our risk reward is upside down. So that's not a play I can enter. Okay, great. So what do? We sweep this liquidity, tap into this is gone, tap into this 15-minute fair value gap here, sweep liquidity, but I don't have a fair value gap inversion. So I can't take a play down here. Everybody saw this momentum. Oh, we're going higher, we're going higher. We got these data highs sitting above us. I'm going to go long. But this is a natural pullback, right? Look at where this comes. We come right back to OTE, tap into this 15-minute, fill the sell orders that are sitting in here, and then we go lower. That's good market structure. That's good price action. That's what's supposed to happen, right? You see when markets are doing what they're supposed to do, they look like this. This is clean market structure. Everyone sees this play here and they think, oh my God, we're shooting up. It's rocket time. No, this is a natural part of a continuation. And so didn't get an entry here. I would have taken this short if there was an opportunity. There was no fair value gap that presented itself to inverse order flow. And then the last thing I was looking for potentially was if we didn't, in fact, take out this internal liquidity that was put in and then look for a play up. But market just continued to dump, unfortunately. This is where we are now. But this, I'm no longer interested. I'm done at 11 a.m. So for me, one break-even trade for the day, and then basically avoiding any kind of losses by trying to go long here. And yeah, took everything live. Link in the bio. Come join us. Take a trade. Say hello.